That said, so I do have some random news. Maybe we'll open it up with this because I know we were talking about it. It's kind of funny. Dun, dun, dun. Does this look familiar? This is the sea of incomplete Ford F-150s. We're talking about.
Remember I was talking about a couple weeks ago?
Yeah, so this is Ford. This is Ford on crack.
That is
Yeah, you have.
crazy.
So they have all of these spaces filled with F-150s, and you said it right. Like they don't have any chips, and then they're waiting for the dealers to pull them in, and then they'll install the chips and stuff. So just because they're waiting, like look at all these trucks, man. They're just sitting there. Like how much money are they losing? You think because they have to lease out the property and stuff too, right? But originally, Ford expected to be short about 200 to 400,000 in 2021. Now it looks like 1.1 million. 1.1 million, dude. So, but they saw a $24 billion return in the second quarter. So, healthy stock, I think, still. Granted, they're just the Ford graveyard for the time being. But GM, Honda, Mercedes-Benz, they're all going through the same thing. So I don't think it's any secret. However, Biden administration, they're setting aside some money, and I don't know if you saw it in Congress. They're hacking out the final remainder, I think today, in fact, as well, going through the infrastructure bill to help out, where they're going to have billions of dollars for many things, including charging stations and so forth. So, but yeah, pretty crazy stuff. Did you freeze, guys? Or are you just staring at the screen intensely? Bodaciously so. Okay, cool. So anyway, of course, then my other headset dies. This is great. So yeah, pretty interesting about the Ford graveyard. But I'm still holding on to my Ford. I'm still pretty heavy and strong on them. I don't know how you're feeling about that one, Jake. Not to scare you, but speaking of that, EVs. So there's 15 startup EVs. I'll pop open the links here. Let's see what I'm looking at. So 15 EV startups that have gone public, completing SPACs. That's a reverse merger that they have since the beginning of 2020. 14 of them have seen their stocks decline more than 10% since their debut day trading. So 8 of them, or more than half, have suffered stock declines of 40% or more. So this is kind of interesting when we're talking about some of the stocks that we discussed running through this. So he's looking a little frozen. Yeah, something's going on with his computer. All of a sudden, we're playing games just fine, which sucks the life out of you, but your computer, bandwidth-wise. So anyway, electric vehicles, looking at them plummet. So I'd be very, very curious, in terms of Lordstown Motors. We talked about them kind of driving into the ground their stock, and a lot of that was just they had issues internally about what they were doing. Excuse me. But the latest one, Aurora, they signed a $2 billion new funding merger with a SPAC at $11 billion. So we'll see if that one goes anywhere in particular. But you're going to see a lot of execs and CEOs hop into different places. So here it is. 14 of them have gone down. 8 of them gone down 40% or more. So couple that with the Chinese concerns that we have going on. We're talking about XPeng and some of the others. Hey, you back? Fisker, that's pretty interesting. Only EV that exceeded expectations, so bear that in mind as well. I think Tesla will be okay. Ultimate chill deal. But the truth is, most or all these are long-term bets, and so that's the caveat at the end of the day is, just because when they opened up in 2020, late 2020 or early 21, doesn't mean that they're going to fade off and die. I think it's just a natural dip that people are looking at cyclical opportunities. And I was listening to a podcast where folks don't want to get out of the market, even though it might look like it's time to hop somewhere else, whether we're talking bonds or whatever it may be, to plant your money for the impending volatile market. But I don't know. We'll see. What's your take on this, on the EVs at this point? Bill, we got 15 EV startups that have gone public after completing a SPAC in 2020. 14 of them have seen their stock prices decline more than 10% since when they opened up. Sorry, I have some issues. Hold that thought really quick, sir.
Yep.
There we go. All right, keep going.
You have so much supply on the market. Is my screen not sharing again for some reason? You have so much supply. You know, we've had a crazy amount of SPACs, IPO, we've had our co-public, had a bunch of IPOs go public, and so there's so many choices out there. And when there's too much supply, and we're seeing there's not enough demand for everything, obviously that we've reached like record levels of money in the stock market. But it's like, how much additional cash do we have to keep all of these stocks up and all these SPACs up? And I think that's what we're learning is we don't. You know, there's just too much supply. Because if we didn't have too much supply, then they wouldn't be going down. So, are you sharing my screen? Is that what's happening here?
Just popped it up.
Oh, I'm trying to post on stock twits right now.
Ladies and gentlemen, you get to watch our fun moments as we start going.
Try to get people. This is how we try to get randos to the stream. But I don't have anything beneficial on the screen. You're gonna see our notes.
No.
Yeah.
Pop it.
You can.
That's not fair.
That's all the secret info.
Yeah, exactly.
But yeah, that's my personal opinion on everything. It's just there's too much supply right now.
Mm-hmm.
We're kind of seeing that a lot of things that we're talking about. What's been really keeping up all these SPACs, and a lot of it was retail money and hype. You know, there's like YouTubers and people and stimulus, and that all went into these really speculative names. But now it's just an oversupply. We've seen these other moments in history very similarly, and it's just seeing a similar reaction. So, that's my opinion.
We're seeing musical chairs happening here. GM hires Neo and Lyft executives. Stellantis poaches Amazon VP. So we're going to see that happen. And as that happens, you're going to see money kind of following similarly as it's going. So just something to pay attention to.
And there's a couple of reasons too. Like, I think we'll talk about some more later too. Is just like inflation. So when you have inflation, you also have inflation of wages. And so in a time of inflation, when you're seeing a lot of inflationary pressures, it's a really great time to find a new job because there's a high probability that you can get paid somewhere else a lot higher. And I think that's another reason why we're seeing a lot of execs shifting to other companies, or people who are higher up. Is there's a lot of money out there to pay people and grab people from other companies.
Right. So you have that GM, and then Jake, this one's for you. Ford, I don't know if you saw this as well as we're talking about EVs. They filed a patent for charging electric cars by towing them. So as we're talking glamorous camping, maybe this is an opportunity that you can recharge your batteries while you're hauling your car behind you.
What does that even mean?
So essentially you haul like you would, I don't know, like your RV. For example, you haul your car behind. What they're looking at doing is charging the vehicle's battery that you can then transfer back into the RV to either save on gas mileage or whatever it is. But they have no idea what they're going to do, so it's unclear what they're planning to do with this. But they just filing the patent for whatever opportunity strikes them at any point in time. But essentially, you're hauling your car behind you. And you could probably use that for whatever, charging up the car itself too, if there's not enough battery, or you're running around town with it and then you connect it back and then you drive to the next location. But they're looking at that as an opportunity. So long-term play, who knows what it means, but it's there. And then along those
investment
lines,
in EV.
Yeah, exactly. And then along those lines, just talked about this a second ago. You have Joe Biden and the administration. They're going back and forth right now on the infrastructure bill, and this is way more money's going in, $550 billion in new federal investments in infrastructure. So think roads, bridges, any infrastructure projects, and then in particular, they're looking at EV. See if I can find it, see if they have it. But I think they're talking in the area of about $7.5 billion to create the first federal network of charging stations for electric vehicles. So there you go.
What does that mean though? Federal network.
That's a very good question. I have no
Is that
idea.
bearish for private companies?
So low emission buses and ferries aiming to deliver thousands of electric school buses to districts across the country, and then a nationwide network of plug-in vehicle chargers. So I don't know if they're looking to help defray the cost of installation, working with, for example, ChargePoint. So maybe it's a contract opportunity for them, or whatever it may be, what I don't currently know.
At Safelite Auto Glass, we're committed to taking care of you.
I know I was reading some article about charge companies, and there's a lot of argument around if they can even be viable businesses because their profit margins are so small.
Yeah, it's gonna be a long play. I think it's gonna be similar to what like Amazon, right? Where they're just getting everything set up. They're working out the kinks, and then when they're ready to implement,
well, they're gonna have to raise prices.
Yeah, absolutely.
Of electric charging, you know.
Yeah.
I think once in 5 years or something, once we get off enough gas.
Yeah, exactly. Thanks,
that they're going to start raising prices because of increase in the industry.
Yeah, exactly. Thanks for popping in, man. Thank you, Safety Auto Glass. My car's in your hands. Randy, it's funny. So yeah, I mean, we're looking at all of that. Safe.
Yeah, I like ChargePoint. I like them a little cheaper from here personally, but I like ChargePoint.
Yeah, I think ChargePoint has an opportunity. Long-term growth. I mean, what are they at right now? It's a day range. Market cap 7.6 billion at this point. Volume trades is 7 million. I mean, that's pretty steady.
My only worry is more dilution. So I think they're just gonna have to raise more money through share offerings.
Right.
That's my main worry with them is they're trying to continue to expand pretty substantially, and I don't think they're gonna have enough money to do that.
Right.
And so that makes me think that they're going to have to dilute shares even more moving forward.
Yeah.
Which is my main concern with them.
Have you been following Blink Charging, by the way? I haven't followed them for a little while. I haven't paid attention to them.
I've been following them.
But apparently
they're much smaller, and they're a pretty high multiple in terms of value.
Right. Yeah, I'm curious to see what ultimately happens, because are they defraying costs? Are these going to be new contracts that the government's going to assign to folks, or ultimately what's the play here? So as we're looking at this, very curious to know what people think, obviously, first and foremost. But as we're going through this, you got 7.5 billion already going into buses and ferries, which is kind of interesting. And then electric school buses.
I mean, it makes sense. They're probably like the most polluting vehicles.
Yeah.
Like that's and they're obviously federal or state vehicles, you know.
Right.
They're privately.
Yeah, and I think there was
I'm assuming privately owned, or at least sponsored.
Well, there's discussion even about the postal office and their mail trucks at some point. They want to be able to amp those back up, but
yeah, there's a lot of companies creating basically mail car replacements that are electric.
Yeah, exactly. So as we're looking at that, we're paying attention. We'll let folks know, and feel free to hop in the Discord. We'll be more active as this starts picking up, because I'm very much a proponent of EVs in particular, just because it's, you know, we're looking at climate change and a bunch of other things in the near future as we're moving forward.
I think Jake asked, will Rivian how will Rivian have any effect on Ford? I mean, I think so.
Oh, Rivian.
You know?
Yeah.
I think two parts. I think that the Ford or the car, or sorry, people who are, I think the I'm like, can't form a sentence. The share of market that are trucks is going to expand because of electric vehicles. You know, a lot of reasons people never wanted to own trucks is they're not efficient on gas.
Yeah.
Or people are like, I don't want a car that pollutes that much. There's a lot of reasons I think people didn't want to own trucks, but I think going electric is going to expand the truck market. But it will for sure, I mean, have impact on Ford. I don't know how big. I mean, I think their truck is cool. I don't know how far out they are from delivering that to the market, but they'll for sure have some impact.
Yeah.
They're well enough known at this point.
Are you looking at them too? You want me to pop your screen up?
Nah.
Yeah,
It's just gonna be
Rivian.
blurry.
Let's look at why isn't it? I forget what their thing is. Anyway.
Keep the world adventurous forever.
Yeah, exactly. The trucks don't look too
They also
bad.
have an SUV too. Interesting.
Yeah. Curious to see what their torque is relative to that of the Ford F-150. I don't know. Who are you thinking is gonna win that?
It looked cool though.
battle?
Cool truck.
Yeah.
I mean,
Ford
they're way more
invested, yeah.
expensive. Here's the main thing. Their truck is $67,000. So I don't know how that compares to the Ford electric truck price.
Yeah, 67 with 300 miles, right? Yeah, the RS.
I think it's around what?
70.
41K for the Ford truck.
Yeah.
So it's 20 something K more. So that's for sure going to have an impact. You know, they're going to have to have a smaller audience.
40K, 230
because of the price point.
Yeah, with some mileage as well that you're going to be looking at. I don't know.
There were some articles coming out though about the Ford truck and that it might actually have a larger range than they're expecting. So that's going to be something we're going to keep an eye on too for Ford, is if their truck ends up having more close to a 300-mile range.
Right.
I think that's going to be a big that can really helpful. I think that'd be really helpful in the success of it.
Right. Yeah. The other thing though too is Ford is backing them, but so is Amazon. Jake.
Amazon too.
So that's going to be the big kicker, and then you got Amazon, ironically, competing with Tesla indirectly and directly now with the space race, and NASA just turned down Bezos, which is interesting because Bezos was going to waive the $2 billion that it takes to get that going, and he got turned down. Man, I was like, oh, that hurts. That hurts your ego. That hurts your play. But Bezos is smart. I mean, he did it with Amazon. You know, defer the costs or the profit, eat the costs, and then just innovate, motivate, and keep moving forward. So
apparently, if you are interested in Rivian, you can actually invest pre-IPO.
Oh, really?
They have a service where you can invest in the company pre-IPO.
Really quick while you're scrolling through it.
I mean, it doesn't seem like it's worth it at this point. Maybe back in 2019, it would have been worth it at a $4 billion valuation, but now they're at a $28 billion valuation. So
I think they did, Jake.
My screen is going to be way too blurry. You're not going to be able to read it.
Doesn't look bad.
It doesn't seem like it's worth it at this point. $28 billion valuation. Yeah, right. Back in the day, maybe it wouldn't have been worth it, but
yeah, it's all speculation anyway. At the end of the day.
Oh, they for sure need a tow capacity.
Yeah. Well, they already. I think they've already added it. I can't recall.
Oh, kind of telling people how much impact it might have. You know?
Yeah. Okay. But yeah, a lot of these SPACs, IPOs. We got a couple charts. Oversupply. We'll kind of jump to the next topic here that we have about expectations. IPOs. Pull that one up. So IPO statistics. That's what we're looking at.
Thank you for switching screen.
Yeah. It's number of IPOs.
Yeah, I mean,
we were
just talking about, about what I thought about kind of all the SPACs and all the electric vehicles, and here's like the main thing. I think I kind of started thinking about this idea of there's oversupply and undersupply happening in the market, and it's creating a lot of volatility. So oversupply is that we have so many IPOs and so many SPACs. So look at this chart and compare this to 2000. What are we? Are we double what we were in 2000 at this point now?
Yeah. And this is year over year, right? So it's 397 in 2000, an additional 141 in 2001.
Yeah.
And it ebbs and flows.
So at the peak of the .com bubble, we were at 400 IPOs, and we're only halfway through the year, and we already have 700 IPOs. That's insane.
Does this include the reverse mergers, the SPACs too?
No, the SPACs are separate.
Apart from?
Yeah, it's different.
Wow, that's insane.
So you just have, and I think there's another chart that I have there underneath for the SPAC. So there's just so much supply on the market, and when you have too much supply, and I would say you almost already have at least from the retail perspective, I would say we're probably 70% maxed out on cash that people have to invest in stocks.
So
Like we're way higher than we've ever been.
So we're tied already, and we're halfway through, a little beyond halfway through the year. We're tied, so we're 250 plus 672.
So we basically have 1,000 new companies on the market just this year. And how many total? I think total stocks on the market is like what, 3,000 or something. It's not that large.
Mm-hmm. Yeah. So
Let me look that up real quick.
Yeah. I'd be a little worried about this. I think there's not enough money to float these companies as they're building, which is interesting because they're also looking at how are people moving their money throughout, retail traders and institutional investors alike, through this whole thing. So through the next year. So I don't know. Anybody else looking at these SPACs in particular? Any IPOs that catches their eye? I'd be very curious to know. Hood, which is Robinhood, obviously, went IPO this week. I think they just kind of went kaput. ARK invested in them, I think, too, right? 1.2 million? Billion?
Probably billion, honestly. I don't know, but I'm assuming that it's a billion.
All right, we'll look into it. 1.3.
But I
they
personally
scooped up 1.3 million Robinhood shares is what it was. Yeah. So 45 million worth. So thoughts on Dole recent IPO?
Is that Dole Whip? What is this Dole?
Dole. Yeah. It's the banana company. So
is it really?
Yeah, they went IPO.
Comedy.
Yeah. So once again, this is why I stay the fuck away from. They slid 9% in the afternoon in trading hours on Friday.
That is comedy.
Yeah.
I mean, this speaks to our point, right?
Like why the hell would you go public? What
right
are they
now
planning on doing? So I'd pitch it back to you, Jeter. Like, what did you buy in on them out of curiosity? But they opened up at $15 a share, given that company implied market value of 1.5 billion. I'll pull them up on the sidebar here too. So,
no lol.
Yeah, dude.
I personally have sold out of all my SPACs that I owned.
I have
because of the supply issue, and I'm not personally buying. There's like a lot of good companies I think that went public, but they're just so overvalued, and all of them are going down. And it's just like we just showed, the supply issue. There's too many out there.
Way too many to pick
and it's only going to keep expanding this year, and probably in the 22 as well. And so it's just something to keep on your radar. So, because eventually, as it continues to grow, it's just going to hurt the overall stock market at some point.
So you got the IPO marked the completion of Dole's merger with Total Produce, creating the world's largest fresh produce company. So that was what that was all about back in February.
Bananas.
That's bananas. In 2020, the companies reported combined assets 8.97 billion, which isn't bad. Generating income 80 million. I mean, at least they're net positive. Burns said the company doesn't expect, blah, blah, blah. I don't know, dude. Like, why? My whole question would be, why did they go public? Like, what's the plan?
To raise money.
For what, though? Like, you know what I mean? Like, what, you're going to buy more bananas? Like, what the hell?
Somebody wants a payday.
I guess. I mean, institutional, they might not even have that on market.
Here are the reasons companies go IPO. It's either they need to raise money, like they have to raise money for some reason.
Yeah, but
the second thing is they want to raise money to expand the business. Or third, somebody wants a payday. Like, those are the three reasons a company IPOs.
What are they investing in? Like, there's nothing here that indicates, unless they're going like genetically modified bananas, and like it's already happening.
Dude, someone just wanted to share out some shares. They wanted to make a little payday.
It's fucking insane, though.
It's like why not go public? You know, with the stock market. But, like, if you're a company right now, and you just see how the stock market's going up and up and up, why would you not IPO at this? You can probably. Your stock can probably IPO at a higher price than it could a couple years ago.
When they hit like $1 a share, because there's not enough to go around. Like, I don't know. I personally have a problem with this.
The payday, bro. It's a scheme.
I don't know. It just
IPOs are mostly a scheme for the most. I would say 50% of times companies IPOing is a scheme for some reason. It's not to benefit you.
Give me some R&D. Like, give me something. right? I get the merger, blah blah blah, but like according to the filings combined, like what?
I mean, it just points to the issue we're talking about, right? There's too much supply and everyone is going public.
Like, give me a
Whether
reason
they're
to
ready
buy
to,
into you.
half of the SPACs that went public don't even have revenue yet.
So dumb.
A lot of the companies that got IPO, they probably have IPOing too early. This is a more, mature company, but a lot of the companies that IPO'd probably IPO'd too early as well, So it's just the market's hot, and what people do in hot markets is they IPO because they know they can get a higher value because the market's hot.
Yeah, I'm staying away from this one. Thanks, but
Oh,
no
for
thanks,
sure.
Jeter. Yeah, I don't even. Analysts have they? Yeah, nobody's. There's not enough info on these people. They were kind of silent. I did see them, but I was like, whatever. I'm not gonna even waste my click on that. And then I did. Thanks, Jeter. Wasted a click. But yeah, there's a bunch of other IPOs. It was on this chart, and I think that's, you might have saw that one, Jeter. You just kind of called it out, but I did see Dole here too as well. But I haven't seen anything that really.
Some of the companies that I like that have IPO'd like a while ago that I'm just keeping my eye on for the long term. So one company I really like is AI. They're basically an artificial intelligence company. They're like one of the few larger, like purely AI companies, and I think they're still pretty
AI?
overvalued. Yeah, their ticker's AI. They're still really, in my opinion, overvalued based on their revenue. What's their valuation at now? What did their stock market cap say there?
Market cap 5.21 billion.
It's only 5 billion. I think it's.
Yeah. You think they're undervalued?
No, they're overvalued. They've come down a lot. Oh, they're 5 billion. Yeah, it's still probably overvalued. I think they're like.
Where do you think they need to be at? 20?
Look at their
30? I mean,
trying to
they're
get to their
annual. I mean, they're still losing money.
yeah, they're. I think they're still overvalued, but if they go down to like $25 share eventually, this is something to look at because AI, like I think there's three things that are happening that are like the next wave of innovation. So innovation always comes in waves, and it's just due to how long it takes to get technology developed to a place where it can be beneficial for society or make money. And AI is one that's making leaps and bounds. So like 3 or 4 years ago, I was starting a tech company with some people, and we were basically working, a lot of what we were doing was AI focused. And 3 years ago when we started it, the AI was not there for what we wanted our product to produce. But if I fast forward 3 years from now, AI has artificial intelligence, deep learning, whatever people want to call it. The rate of improvements happening in that space is increasing so much, where this is going to be one of the next big catalysts for technology. AI is a big one. Augmented reality, VR, that's another space that's getting pretty crazy.
Facebook's heavily investing.
Yep. And so, and then I mean, there's a few other ones that are really interesting, but those are two of them. And so this is a stock I'm keeping my eye on. Still think they're really overvalued. I think they make like a few $100 million a year, if that, if I remember correctly.
Yeah. They're net negative, but yeah, they got a lot. They got
What's
cash.
their revenue at?
Revenue's at 52.
What's their yearly?
Net income.
What's their annual?
183.
Up 2 or quarters. If you click annual.
183.
Yeah, so they're 5 billion valuation.
They're increasing. Like,
they make 150 million basically. So I personally think they're extremely overvalued, but it's something I'm keeping my eye on. If they get to a couple $1 billion valuation, say 2.5, 3 billion, it's something that I might start consider acquiring shares, because maybe not today, but in 2 or 3 years, the growth of this company will start accelerating pretty substantially.
yeah.
So this is something that I'm keeping an eye on. This is one of the IPOs that I was looking at initially, and when they first IPO'd, they went from 100 to like $150. I was like, this valuation is stupid. Like, I'm not buying in right now, as it's come down. So this is something I'll keep my eye on. Other IPOs, I'm keeping my eyes on Hood. It has a lot of hype, so I don't know how much it's going to come down. But long term, I personally believe Robinhood's going to be very successful. at a $30 billion market cap, I have no interest in it.
Yeah.
But
Pretty high.
I do think they're going to have a really bright future for many reasons. So it's definitely another one I'm keeping my eye on for the long term, but not right now.
Jeter, did you go in? 10 bagger? Did you guys go in on Hood? Let's talk about cloud.
About the cloud.
Where do you see their pipeline for that play out? The cloud? Okay, I was going to talk more tangible items, but we'll come back to that. Part of the inflation, deflation stuff we'll get to here, and we'll come back to that whole thing, because freight, I talked about that a couple weeks ago, and some new numbers are coming out, and it's pretty scary. But
yeah, so to set this topic up real quick, so we talked about oversupply of like, yeah, AI and cloud are definitely connected. But now let's switch to where undersupply is happening, and Nate, take it from there. Like, we're just seeing costs skyrocket.
Unprecedented stuff, starting with the Suez Canal,
yeah.
Right? So you had the big fucking cargo tank, cargo boat, if you will, ship gets stuck, and it backlogged, I think, like, the double digits of backlog of supplies and materials and goods going to the U.S. and other countries for that matter. But big issues are happening here. You got $32,000 is kind of the cost now. There's a good graph that I'll pop up here in a second. But before the pandemic, transportation price spread among refrigerators and other goods was 12 to 16 per unit. Now it's closer to $70 per unit. And so when we're thinking about toys, for example, or anything that has to do with Christmas time, people are now shipping those out like months in advance because of the scarcity of product and the costs, the inflation of the costs that are going out. So I'll pop open this chart. This is very indicative of a scary market that may be approaching us in the near future. And this is the Drury World Container Index, and this is the price of what it costs to ship something out. And so the importance of this is you're seeing this increase like 5-10 fold throughout the years. So, man, Jeter, you really want to talk Hood, man. So it's just be very, very mindful of this as we're going through this. I'll pop open. Here's kind of the explanation of it all in that chart that we're talking about. So you got Shanghai to LA, Shanghai to New York. These are kind of the main trade routes to get stuff to us. And so you have this, the composite that I brought up. It's a 40-foot ocean container freight, rates on 8 major routes. So as you're seeing that increase, this is taking an average of all the people who are taking routes to the U.S. in particular, or other areas that have massive imports and exports for that matter as well. So you're looking at Shanghai, LA, Shanghai, New York, Rotterdam to New York, New York to Rotterdam, and it averages out those costs. So the Drury World Index tells you what the average port-to-port U.S. dollar rate is for a 40-foot container in 8 major trades. So as we're looking at those numbers, once again, this is fucking scary, because now the prices of just the cargo plus the goods that are going to be shipped in are going to be skyrocketing. And I've heard interviews about toys going up 10, 20, 30%. Just by virtue of, so Christmas time's coming, but beyond that, lumber's coming down. Obviously, we've talked a little bit about that in the housing, but that's more local demand than it is global demand. We're talking about these goods, so fridges, furniture, everything we get from China is going to be exponentially increasing in terms of costs. So just bearing that in mind, 32 grand to ship something out is what somebody was quoted. The other component, there's a few other things. U.S. consumers have plenty of extra spending power these days. We'll talk about that in a bit. But there's specific facts. Sorry, I'm trying to look for it.
Kind of like what Nate's saying is just the point is, so the economy's booming, and we keep hearing, if you turn on CNBC, purchasing power has never been as large as it is right now. And people have saved more money than they've ever saved, in the last 50 years, savings rates, even though that's now under 10% as of the other day. Yeah. But what we're seeing is supply can't keep up with demand, so that's going to start affecting us coming in the second half of the 21. as well as 2022, because like Nate said, like we're going to start paying 30% more for things, and maybe toys, but maybe when you buy ketchup, it's going to be 10% more expensive. So instead of paying $2 for that ketchup bottle, you're paying $2.50 or something, like whatever the math is there. And so these are things that are really important, because if we're having persistent inflation, which is basically what I'm saying, and we're seeing growth slow because of supply, and from everything that we've been talking about the last couple of weeks, it looks like the supply shortage is not going to be stopping anytime soon. Powell, the Fed talked this last week, and they talked about how he doesn't think inflation's transitory. But every time we come on stream, we talked about it the other week too. Yeah, 10% increase. I know, Andy. I know when I said 250, I realized my mouth was wrong. But the point is like, it's not transitory, because we're seeing costs go up. And when someone increases a cost of something, they don't move it down. When ketchup goes from $2 to $2.20, it's not going down. They're not going to adjust prices. And so we're going to start seeing this happen across all of the things that we have in our lives. And that's going to have an impact on the stock market, because people are spending more in life. They have less to invest. Maybe some companies will see, more of the value names. We've been talking about it might be a good idea to start looking at value names as investments over the last probably the last month or so. And it's because there's companies like Heinz or whatever parent company owns it. Like they're going to be passing on to those prices onto the consumer, the extra supply costs. So maybe those companies might have better numbers, but something like a SaaS company, like a technology company, like they don't necessarily benefit from inflation the same way that some other companies do. So it's going to have an impact on your investments, and it's something to keep track of, is if we're continuing to see prices stay inflated and supply to have undersupply of goods and needs. So that was a long few sentences, but
that was good though. That was good. And so you'll see some of the ports. Look at all these ships just anchored. They're not even berthing, meaning going to like the docks to unload and load.
Yeah,
they're just sitting there chilling, like weeks on end, like 2 weeks, 3 weeks, just sitting there because they can't get in and out. Plus, there's a shortage of labor. Longshoremen who are unloading all of these items. There's just not enough. There's too much demand globally, and part of that, Amazon, ironically, just their shares sunk 7% on Friday.
7%.
So massive demand going on here globally. All these ships just sitting out in the harbors, waiting to get in, load, unload, and get the heck out. It's just unprecedented at this time. But as we're seeing it, fridges cost, 12 to 16 bucks per unit. Now they're closer to 70 bucks. So you could, fit in about 300 fridges in a 40-foot container on these ships. Multiply 300 by, the 12 to 16 minus what's now 70 bucks. That's your difference. Randy, thank you for your math. But yeah, as we're doing that and talking about this, it's just important to note, like, shit's gonna hit the fan, and it's already hitting. We just haven't felt it quite yet.
Yep.
The prices haven't
hit the shelves,
so to speak. And so there's going to be an influx of also demand. And I've heard even folks are now, to your point, Dill, we're not saving as much. We're kind of spending now. And so there's going to be less money for like Q3 and 4 to buy these products.
And the eviction moratorium ended. So
today.
Yep, today.
And then you got September, all the checks might be getting cut back. Who knows what's going to happen? So just
unemployment benefits going away in September. Student loan, forgot the word.
Forbearance, is it?
Forbearance, yeah, is ending in September, and so we're having a lot of things starting to stack up that are going to start limiting the free cash flow for the everyday person, and so that's going to impact the stocks and the stock market. And so it's something that you really need to pay attention to for your portfolio and what you're investing in. because even though Powell keeps saying like we're not raising interest rates, we're not tapering, the economy's not ready, eventually they're going to have to, and that's going to have extreme impacts on the stock market.
Speaking of Powell, just popped this pretty face up. So consumer spending and incomes rose. That's what we were just talking about, while key measures of inflation dipped in June.
Because everything great is birthed.
Great commercials popping on. From there. CNN, you're funny. But yeah, we're seeing that happen. And so Americans put higher income. Consumer spending rose 1% in June, following a decline in May. Consumers spent some $29 billion more on goods and some $126 billion more on services, especially restaurants and accommodations. So as we're coming back online, people are starting to spend.
And for context, I just brought up the personal savings rate. We're back at January 2019 levels. So the huge peak that we saw during COVID has eventually gone. So people's saving rates are as high as they were pre-COVID for the most part. And so we're basically back to the same savings rate. So people have the same amount of money they had pre-COVID for the most part, but we're going to continue to see costs increase over, I would say, the next year or two. Until some of these supply chain issues get sorted out, which they take a long time. So these are things to pay attention to for your investments.
No problem, Randy. You're just doing back of the napkin calculations for us. I was just kidding. Being a little facetious on my comment. But yeah, it's very important. PCE, the price index, rose 0.5% as well. I think we have another article to pop up, the Federal Reserve.
Yeah, I mean, it kind of goes into, so taking this undersupply topic and transitioning it to, we've been seeing a couple things happening from the Fed, is an underestimation and an over-expectation. And so the inflation and CPI numbers came out this last week, or was it this last week?
The PCE price index did this last week.
Yeah.
CPI, I think
it was a week before. But we weren't streaming. So CPI came out again, it increased month over month. I think we are at just under 6% now. So it keeps rising, and so the question is how high, who knows? But it's just to realize is the Fed is saying inflation's transitory, it's not going anywhere, but we're still seeing it go up. And to talk about our other points of all the shipping delays happening, all these things going on, are not telling us that it's transitory. The facts are not saying that this is going away in 3 months. The facts
we're not
are
even
saying,
talking about it.
Like
nobody's talking about it.
The facts are saying that inflation will most likely last at least the next 18 months. Probably somewhere in that time frame, we'll still see some kind of elevated rates of inflation for that time period. Probably. I don't know how much higher we're going. I don't know if you have thoughts on that, Nate, but we're going to see somewhere between this CPI numbers of 5 to 7 probably for the next,
I'd agree with
at
that.
least next year.
I'd agree with that. Core? Are you talking core, or just in general?
Yeah, whatever numbers they put out.
Because the other thing too is it's kind of skewed because of travel industry. We talked about that. Like, there's numerous categories that are up 10+%. That kind of weigh it on that side. But I think it's going to be consistent. Either travel like slows down a bit, but then other items are going to be picked up, like we're talking about. And gas, thank God, OPEC Plus figured out their whole ordeal. Gas is going to kind of level itself out theoretically, but everything else we're talking about, I think it's going to keep increasing, and so it's going to take a toll. But yeah, so in the Fed, which each month currently buys Treasury securities worth $80 billion and mortgage-backed securities worth $40 billion, noted the economy has made a lot of progress since the policy has been in a place. Do you think they're going to continue doing that, Diller? You think they're gonna taper back, or they're gonna have to invest?
They have to eventually.
Yeah, they haven't made any.
The thing is like, unless I would say sometime by the end of the year, if they don't taper by the end of the year, all that's happening is we're creating the largest stock market bubble of all time. So to give you more context of how things work, so the Fed buys mortgage-backed securities, and they're buying a buttload of them. And what that does is that increases housing prices. And so, another thing we didn't talk about, we talked about it in past streams, and maybe we'll talk about it in a second as well, but
Pop it up.
there's a really low inventory of houses on the market, and that's mostly due to not developing houses in certain markets that are really hot. And so you have this undersupply of homes, but you have this really big, you have both the feds buying a ton of mortgage-backed securities, and you have really low interest rates. And when someone says, "Oh, I get to buy a home at 2.9% interest over the next 30 years," you're getting a lot of people who want to go out and do that.
Mm-hmm.
And so they're buying that, and that's basically helping the stock market or the housing market even hotter than it probably should be in terms of price increases. I think this personally, and for Austin, houses I think increased 30% over the last year. I think average was like 15 to 20% nationwide.
Let's pop
Or
up
maybe it was
Zillow.
12% or something. I think it was 12%
Go to
nationwide.
Austin. Let's go to
But yeah, Austin is really ridiculous. But
Randy. What kind of house are you looking for? Let's
yeah.
find you a 2-bedroom.
You got kids, probably not that. But they're also buying bonds basically, so they're propping up the bond market as well.
Right.
Yeah.
And so we are
Austin's basically the Bay Area now.
Yeah, you guys thankfully have taken it away from us. Thank the Lord.
And we have property taxes way higher, so your mortgages are actually much higher.
4-bedroom, 2-bath. All right, I'm on it. We'll seek one out for you in Austin. Get you out of the Pacific Northwest, maybe, or wherever you are.
It's probably just expensive, honestly.
2K square feet.
Oh yeah,
Ooh,
you're
good
paying.
luck. Good luck.
You're paying. Depends where we're at in Austin, but if you want to be in Austin,
let's see.
that's probably $1 million at this point.
Let's punch this in. Let's see more. You want an HOA with that, Randy? Let's go 2,000 to any.
If you want to live up north, it's probably about 600K, 700K.
Let's see.
But in Austin, in the city, it's probably about $1 million.
Time. We'll go 4 bedrooms.
800 to $1 million.
2-bath. All right. So, ooh, there's something there. Where's a good spot to look at, Dill? Where's around Austin? Let's see.
That's a popping area right there. You want to where you just were at?
$1 million.
That's kind of. I'm not gonna tell you guys where I live actually, but if you go up and to the right a little bit.
Yeah, up here.
No, up more.
Up
Oh,
here?
sorry, you're delayed on the stream.
Oh,
I
yeah,
think.
yeah, sorry.
Yeah, right there in that area, a little bit lower.
Ooh,
Where it says Mueller.
Yeah.
Do you see that? Yeah, in that area. You're paying about $1 million in that area.
Dang. Look at that one, 6-bedroom. Just for you. I think it has your name on it, Randy. $500,000. Psh, easy peasy.
That's 35 minutes from the city.
There you go. So
You're out in the boondocks.
Yeah, as you're saying, the Mortgage Bankers Association said was its seasonally adjusted market index rose 5.7, reflected 9.3 increase in applications to refinance existing loans as well as purchase applications declining 1.6. Yeah, so am I. I'm not. I wouldn't look out there. That's pretty crazy. But it is interesting because here's what's the latest stat I heard. Well, besides the rent, I think we talked about that a couple weeks ago. Rent it's actually cheaper to rent than to buy in the Bay Area now. So
a lot of places are like that, yeah.
Yeah, not the
or becoming like that.
Yeah, lumber costs have dropped. Just kind of talked about that. Where do you think the housing prices are ultimately going to go?
I think that we'll probably have a little dip soon. I don't think it's going to be a big dip, but I mean, we're kind of jumping all over the place now. Let's get to the housing boom in a second. But I do want to cover a couple more things on this inflation CPI, because something really important to know, and this I think directly is connected to the stock market, is for Q2 of this year, news came out this week that said that GDP growth came in at 6.5% compared to the 8.5 estimate. So there's been like a bunch of talk about how we're going to see like record levels of growth of GDP in the US. And we're going to continue to see 8.5% plus coming in the second half of the year, and we're already showing lower than expected. And so that's a really important number to keep an eye on. And I think it was Morgan Stanley or somebody came out today and they actually downgraded their GDP expectations for the second half of the year.
Wow.
And so you're starting to see a little bit of level-headedness in terms of how the expectation around growth in the U.S. And that's really important because when we think back 6 months ago, people have been investing with an expectation that we're growing 8.5 to 9% this year GDP.
Yeah.
And so if we continue to see slowness in the second half, we have the Delta variant happening. We're seeing a lot of supply chain issues. All these issues combined together can drastically lower GDP growth, which in turn is going to affect the stock market because people have been pricing in a higher level of growth. And that's perfectly connected to Amazon. We talked about it earlier. Amazon's down 7% on news because they had to comp year-over-year growth. Q2 last year, they grew 43%. They grew, I think, 15 or 20% this quarter or last quarter. That's half the amount of growth that they were expecting this last quarter. And so we're seeing a really large slowdown. And I think it's much larger than people expected, which is not going to be a good thing for the stock market in the second half of the year. I'll caveat that in saying that when it comes about the stock market going up, it's all about liquidity. And so if you're seeing the Fed continue to buy the same amount of mortgage-backed securities, you're seeing them print the same amount of money or buy the same amount of bonds, then the stock market will stay propped up. But we're seeing a lot of red flags showing. And that's what we want to keep you guys in tune with, is all the red flags showing itself in the market. Doesn't mean you got to sell out of your portfolio, but it means is that you need to really keep an eye on what's happening behind the scenes, because all these little things, supply chain issues, not hitting growth numbers, Amazon seeing half as much growth than they expected in their e-commerce, like all these things are very, very important for the overall health of the market, because we're seeing higher highs and higher highs and higher highs, even though red flag after red flag is showing itself.
Yeah. And there's kind of a side chat going on in the chat in and of itself, but the inverse correlation here to your point, Randy and Jake, sentiment to buy and sell are at odds right now. So it's pretty interesting to see that as well. But yeah, GDP, CPI, whatever other acronym you want to throw out there, it's all important stuff. And it's not a direct correlation to stocks. In fact, it's different sectors of stocks to pay attention to, kind of to Dill's point. And if you have individual stocks, definitely I check my portfolio a couple times a week, like the full-fledged portfolio, like where am I at? Should I reposition anything? Do I need to sell or buy more of it, of something, as I'm seeking opportunity? So yeah, we'll see how this all pans out in the next, well, I don't know, month or two with everything happening. I think Christmas time will be a pretty interesting moment to kind of see where things land, because a lot of things are the confluence of less federal aid as of right now. They're taking recess Congress until September. So I think when they get back, it's going to be either like an oh crap moment, or okay, we have to readjust and everything will be okay. So we'll see what happens. But what do you think about the fourth wave of COVID?
What does everybody in the chat think?
So there's a study that came out. Politics and religion and everything else aside, CDC, quote unquote, shows study 74% of people infected Massachusetts COVID outbreak were fully vaccinated.
But they told us that we were going to be safe, Nate.
So yeah. Don't know if anybody plans to travel. Airline industry is, I think, going to tank again. I'm still quasi bullish on travel for the people who, the marshmallow test. Do you know what that is?
They say they're not going to shut the economy down again. That's what they're saying. Say we're not going to shut down again. It's off the table is what's been said.
Yeah, the marshmallow test. Have you heard of that?
You were talking about it the week before, but I don't remember what it was.
So people, they fail, it's deferred gratification, if you will. People are they don't wait as they could. But yeah, it's interesting because I think this is exactly what I was alluding to. So yeah, more than when we were shut the first time. But it's just because it's a hodgepodge of people who have been vaccinated and not vaccinated. Supposedly it's not as bad if you're vaccinated.
Yeah,
But
that's what
who's
they're
to
saying.
say like what you feel?
They're saying not as many deaths.
Exactly.
So you're just gonna you still can catch it and you can still give it to somebody.
Right.
But if you're vaccinated, that's what they're saying, at least right now. It's very early on, but they're saying your chances of having a severe illness is much lower.
Right, but it's more transmissible than the common cold, the Spanish flu, smallpox, Ebola. Like, this is a mutated virus that is just going to punch through the veins of all economies yet again. I'm curious to see how folks react to that, and specifically our market. And so you have Amazon, they've adjusted their return to office plans. They were supposed to come back this month. It looks like they're pushing it out until September. You have Google, or actually Amazon might be waiting. I take that back. Apple was looking to come back in early September. They're looking at August 1st now. Report shut down its offices in New York and San Francisco, pausing the reopening. You have Alphabet, Google. They're joining the list of quote-unquote big names to postpone return to office. Tech Giant said it's extended the work from home policy through October 18th. So, and the thing for us in particular in the Bay Area is a lot of our food and beverage industry, our hospitality industry is contingent on workers coming back to work in office. And so the fact that folks are going to work from home, what does that do to the food and beverage? I think there'll still be a demand for that, but it's going to come in a different shape and form as it has over the last, I don't know, I was going to say 365 days, but it's like 500 plus days at this point. I don't know. What do you think, Cuz? What's going to happen? Foretell.
I don't think that the U.S. is going to shut down again. I think we saw what happens when we do that, and it's not very pretty.
Yeah. You think people would abide by it? If the Fed said everybody has to stay indoors for 30 days, they did that in China, like for a little bit there.
Yeah, they did do that like a month or something.
Yeah.
Yeah, because they're going to shut businesses down, and if businesses are shut down, people aren't going anywhere.
Yeah.
But I think if anything, like shut down, like California is going to be the one that shuts down. California and New York, they're going to be the ones that are probably going to be the ones that would shut down out of any state. But yeah, I mean, I think it's really interesting. I think I'm not going to go conspiracy theory or talk up too like gnarly, but I think what we have to realize is businesses are here to make money. And so Pfizer, they had their earnings and they said they're expecting to make $333 billion off of COVID. 300, I think, was it 330 or it's 33 billion? Those are much different numbers, but it's somewhere one of those numbers. And they make money from you getting shots. You just got to remember that. And so it's all about making money. And booster shots, they're going to make more money.
Right.
And I sent you an article, Nate, but
like the plastics
I was doing
and masks and all that stuff. Yeah.
I was doing some research on it because I was really curious about, like, historically speaking, like, do we see variations come out all the time? And I found this really fascinating article. I think it was a Washington Post, and they talk about how the Spanish flu is still around today.
Interesting.
And how what you see is you just see variations of things over time.
Right.
And so, in my personal opinion, I think we're going to continue to get more variations. Florida came out on Thursday and said they have a new variation showing up from Puerto Rico, I think, is where it was from.
New variant.
And so we're going to continue to see more variants. It's not going to go away. They're going to create more boosters, shots, because every 18 months you're going to have a booster. There's a reason we still get the flu shot. We get flu shots because there's variations always happening.
Very good point.
And it's the same thing with COVID. It's super, obviously it's much more destructive than an average flu. But over time, our bodies are going to get used to it. We're going to build the antibodies, and it's just going to be another flu eventually. But right now it is much more destructive. But but that's how things happen.
The freedom variant. Yeah, dude, all the fucking people
I love that.
out in
That's
that
funny,
area,
Randy.
man.
The freedom variant.
Yeah, those people funny. Oregon's
I
got
mean,
more than
Florida's a
1,000
fun state.
cases. Yeah.
I don't think they'll shut down though.
Yeah,
I'm pretty like
people are just gonna have to
unlikely
keep
that
wearing
it's gonna shut
masks and
down.
whatnot.
Austin, we're here. We're same thing here. They're indoor or wear masks indoors. We're back to that again.
Yeah.
So
Well, we got bars and stuff. I know in the Bay Area, there were a lot of bars are mandating people actually show their vaccination card.
mm-hmm.
So it's a whole nother wave.
Now that's a very interesting thing because the U.S. government said that they're not going to do mandatory vaccinations, but it doesn't mean companies can't
Mm-hmm.
and businesses like Google, Facebook, I think Apple all said that for employees to come back to the office, they have to be vaccinated.
Yeah, I remember that.
So it's gonna happen. You know, like even though the federal government can't do it, businesses are gonna do it.
Mm-hmm.
And if business do it, then that's just gonna put more pressure on, you know, people getting vaccinated to do things. Like you're not gonna want to sit in your house all day.
Yeah, exactly.
So
Yikes. Well, that's quite a bit of good content. Anything you guys want to hear more of? Anything we can cover next week? We could dive a little deeper into some stuff, but definitely I think this is apologies for not being on last week. We took a little break as we streamed a lot.
we've been putting in the work for y'all, streaming 3 days a week.
Yeah, Wednesday's our fun day, but any games we should be looking at? Any content you guys want more of? We're trying to keep it as open. Obviously Saturdays being more macro, and then Sundays Deal kills it with his technical knowledge, dropping technical bombs on people, analyzing some stocks. So, but anything you guys are looking at, let us know. Otherwise, I think that's all I got for tonight. I think we hit through most of it. We talked about the housing boom.
Yeah, and if there's any
Randy's-
topics that we cover, guys, and you want us to go a little more in depth on, I know we run through things like inflation and CPI and GDP growth, and we kind of gloss over it and don't really go super in depth on some topics. But if you guys want us to go a little deeper compared to wide, because I know this week specifically, we covered a lot of topics, which I think were all very important to know when it comes to how it's going to affect our lives and our investments. But if you guys want us to go a little deeper in some topics, we can definitely do that as well.
Towers.
So please let us know.
Towers. I'm gonna look that up. Let's look up some gameplay. Tricky Towers. Old school. Oh, it's PS4 examples.
The dead numbers.
Like a
It's hilarious.
Tetris.
Is it like a mobile game?
On PS4. Okay, so it's like an open air Tetris. That's interesting. Competitive mode. You play online, right? Is that what this one is? It's all PS4 though. Boo, PS4. I guess you can play it here. Oh, maybe not. Nintendo Switch. And some PC.
Surprised that's a console.
Oh, they do have it on Steam. It's spoke too soon.
Yeah, I'll pass on that one.
Not your game. Not your style.
That's something I play on my phone.
It's interesting. But yeah, maybe next week we'll talk a little bit about I'll talk about the house stuff. I just finalized everything. Got everything in my name for the house that I bought in Detroit. Be curious to know you guys' thoughts. I'll pull up some pictures and stuff and show y'all what's cracking out there. Detroit, Michigan. Don't ask why I bought out there. Oh, you can ask. It's okay. But big opportunities out that way, I think, long-term play. You looking at anything, Bill? Add to your portfolio?
As in terms of what? The housing?
Yeah, you looking at any?
I don't know.
Portfolio on
You
some
moving
assets?
again? Definitely not moving to Detroit, bro. That's
Nah.
cold as hell.
Yeah.
I remember looking up because Nate and I have been talking about Detroit for a long time, and I was like, That's like a cheap place to live. You could live in like a big ass mansion for 200K. And I looked at it's like the average temperature is like 50 degrees. I'm
Yeah,
like, no, bro, you got me messed up.
yeah.
I am not living in Detroit.
Detroit's interesting.
You got me messed up. I don't know. I'm thinking of buying a house potentially just to live in because rent prices are starting to go up. That's another. We didn't even talk about price changes.
Right.
People talk about how rents haven't gone up. Rents are starting to go up a lot right now, like exponentially going higher. Like rents are going up like 10-15% higher now, and we're going to start seeing that personally, I think, across the whole nation, which is an inflation that doesn't get factored in and is going to start impacting our lives. But so I've been thinking of maybe buying a house sometime next year, because rents are going up, and I think maybe next year, depending on how the market looks, it might give an opportunity to buy at a price that might be lower than what my rent could be in a couple years. So potential that. But I like San Antonio. That's a place that I'm keeping an eye on for investment properties.
Yeah. There's a
I
great
like San
app.
Antonio.
I use LoopNet. Jake, I don't know if you've heard of it, but not any plans to buy in Washington. I have the one house, but I don't think I'm going to buy another one up there.
It's
Too
hot, right?
expensive.
It's too expensive.
Yeah, I'm looking at duplexes, and they're like the cheapest I found more recently because I think it's cooling down is like 350,000, but they were up to like $500,000 at one point. And I was like, nope. But it's kind of funny and racist here. Mexican town. This is where I bought next to. Actually, my house is right behind this. The one that I just closed on is back here.
So this is what before I think I invest in Detroit, I really want to take a trip there because
Yeah.
the only issue I'm having with Detroit is it's super hot and cold depending where you purchase.
Yeah. Yeah.
Like
Well,
what I've heard is there's some streets that every house on the street is boarded up,
yeah.
and you go down 3 streets and every house is lived in. And so
Yeah.
that's the only thing that
I hear
worries me
opportunity when I hear
about
that.
purchasing.
Yeah, no.
I mean, there's opportunity, then there's like if we're in a hot market and things cool down, like you're gonna live in a city that nobody lives in and no
Long
one has a job
Beach.
in.
Yeah.
So that's my only.
Condo. I don't like condos. To be honest, there's too much
Yeah, I wouldn't say condos.
between HOAs and a bunch of other stuff. They're kind of spendy.
It's a hard investment.
Yeah, and there's some legal stuff around that, like we saw in Florida. You know, that building got knocked down, but maintenance and stuff becomes who's maintaining the building, the common areas, all that kind of stuff. It's a headache. But yeah, there's some decent ones out here. Maybe we can talk about it next week. But there's reasons why I bought out here. You and I have talked about that offline and online a little bit. But I'll run down kind of my thought process, show some interior pictures, because it's, to your point, it's an area where there's houses not boarded up, but the government has some programs and there's some private investment going on out in that area. But
Yeah.
Lemonade's good. But yep, see you, Jake. Night, man.
Night, Jake.
Yeah, apart from that.
Yeah, the only city I've looked around at some different cities. The only cities I really liked were Detroit, San Antonio. The reason I like San Antonio is I personally believe Austin is going to be the next Hollywood and Silicon Valley.
Yeah.
And so it's going to have a lot of overflow. And San Antonio is a city where prices have not gone up as much as some other cities. And it's only an hour and a half away from Austin, depending where you live. And so it's going to have the overflow effect, kind of similar to Sacramento. We talked about it a couple weeks ago, where a lot of people were moving from the Bay Area to Sacramento because of costs.
Yep.
And costs are
Proximity to-
skyrocketing so much in Austin right now that people are starting to move to the outskirts. And it's going to go
happening.
farther and wider and wider.
You
and
know
I think
you've made it.
San Antonio is going to be, San Antonio is going to be a great place. I think it's going to be a city that's going to evolve quite a bit over the next 10 to 20 years, in my opinion.
Crazy.
So yeah, San Antonio, I agree with Nate. I really like Detroit as well. Detroit's like,
San Antonio's good. I eyed San Antonio for
it's like
a while.
20 to 30. I'd say a 20 or 30 year look on Detroit personally. It's even longer time frame. Because The only concern I have with Detroit is there's going to have to be a lot of luck for the city to turn around in terms of businesses moving there or certain industries revitalizing.
Right.
Those
it's
are
kind of
the
like my hurt stock.
two worries. Yeah.
I'm all
High
about
risk,
that.
high reward,
Yeah.
low
but
investment.
San Antonio, I agree with. I was looking there. Detroit. I peeked at Chicago, turned away from it.
I turned away from Chicago as well.
I'm steering away from California. Looked up in Washington, Oregon a little bit, but good few large content creators that later moved to Austin. Yeah, it's a good spot. It's a good spot for that kind of stuff. It's
gonna be the next Hollywood.
But and plus Austin's kind of it's lit, man. Like there's some good stuff.
So
up
remember
there.
on the
Austin
map
city
where you were
limits.
looking,
Yeah.
Nate, on the map in Austin. So if you go about 10 miles east, they're building a Hollywood studio. They're building a
East Austin?
they're building a basically like a
Production set?
hundreds of acres production basically center.
Right.
So I personally believe it's going to be a mix of Hollywood and tech, in my opinion.
Yeah. Well, it's
in the coming
built
years
for it already through Austin city limits and some other things. Plus the you got East. Is it 7th Street or 6th Street? East.
6th.
Wherever that's at.
But the prices are too high there to invest. It doesn't make sense to make investments in the city.
Yeah, no.
It's way too expensive.
Yeah, unless you got a portfolio and bankers behind you, like we're doing in San Jose right now. We're getting some out-of-state money. It's kind of crazy. But yeah, thanks for hopping in, Jeter. You have any questions? I hope. Thanks for swinging by. Greatly appreciate it. We'll talk a little bit more about your questions. We did go off topic a little bit for Dole, so wanted to loop that back around. But definitely Hood discount brokers are moving to partial share offerings. Yes, they are. A lot of folks are doing that now, even the big firms. There's a couple different ads I've seen lately. Where's their growth going to come from? It's all the retail traders, man. I think they were underestimated for a little bit, but I'm curious to see, and maybe we'll leave it at this. Still, where do you think retail trading is going to go by next year? You think it's going to go down or up? Once people start getting back to work?
Down. They're already tapped out. Retail traders are already tapped out.
Yeah.
Very few people have a lot of dry powder, as people like to say, on the sidelines. A lot of people are almost maxed out in their portfolios at this point.
Yeah.
Not
to mention the levered. There's
leverage.
Taken out.
There's a lot of leverage in the market. Put it this way, there's a lot of people in 2000 that got in the market for the first time. And I don't want to be the bearer of bad news, but eventually we're going to have a very similar situation, and a lot of people are going to get burned.
Yeah, they're going to cash out and walk away.
Yep. Well,
cash
maybe
out.
Not even cash out is cash out with half as much money.
Yeah. Pennies on the dollar.
Cash out with half as much money.
But no, good questions, Jeter. I think that's definitely something that we'll discuss next week. Put that on our chat list. Because I think cloud is a big component, like you're talking about. Microsoft as well. Tickers, Microsoft and good.
Cloud computing, cloud processing.
Computing. Yeah.
Definitely speeding up.
And that's going to be the future forever. It's a matter of...
It already is kind of too.
Yeah. Well, what are we going to adopt? How are we going to use it? And then who's ultimately going to be running the world with it?
Who runs the world? Microsoft thing.
Is that Beyonce? Who runs the world?
Yeah.
Fair enough. Well, thank you all for swinging by. Gamed up a little bit earlier. Warmed up for this. So, as you know, we game.
You win.
Is that a question or statement? Either way, you win. I don't know.
You win.
Yeah. Ticker